All right, let's dive into a really fascinating story playing out in the market right now. We're talking about a tech titan that seems to be hiding in plain sight. This is a company that's right at the heart of the AI revolution, but, well, its stock is telling a completely different story. Let's break this thing down.
So let me ask you this. What if I told you that one of the most powerful, yet strangely overlooked AI players out there is a company whose products you probably interact with every single day? The numbers here paint a very, very curious picture.
Okay, first, let's talk scale. This company has a jaw-dropping 850 million monthly active users across its key products. And get this, that's a 17% jump year over year. For a company this big, that kind of growth is just massive. But believe me, we're just getting started.
Now let's zero in on the AI-specific growth. While Wall Street has been kind of skeptical, this company's AI-focused annual recurring revenue, or ARR, hasn't just grown, it has.
That's right. It tripled in 1 year. And we're not talking about projections or some little pilot program. This is cold, hard cash from AI-first products, growing at an absolutely explosive rate. This tells you there's a fundamental shift happening in their business, and it is already paying off big time.
So you hear 850 million users, you hear AI revenue tripling, and you'd expect a sky-high valuation, right? Something crazy. But that's where this whole story gets really strange. The stock is trading at a forward price-to-earnings ratio, which is just a key way to measure its value, of less than 10. Seriously, let that sink in for a second. We're in a tech world where just the mention of AI can send a stock's valuation into the stratosphere, and this established leader is trading at a multiple you'd expect from, I don't know, a slow-growth manufacturing company. So what is going on here?
And this brings us right to the heart of the matter, the Wall Street paradox. You've got a company showing massive user numbers, explosive AI growth, and yet the market seems to be completely shrugging its shoulders.
I mean, just look at this table to see how big the disconnect is. Just a couple of years ago, this company was trading at a forward PE of over 40, even close to 50. And now, even with this proven AI success, that valuation has just collapsed to a little over 10. It's a dramatic fall in what investors think it's worth.
And when you put it side by side with its peers, the gap is even more glaring. The median forward PE for the entire software industry is over 16. Our mystery company is trading almost 40% below its own industry's average.
It's the billion-dollar question, isn't it? How can a clear market leader with such powerful growth numbers be valued so cheaply? Is the market seeing some fatal flaw that we're not? Or is it missing what could be the biggest AI bargain on Wall Street?
Okay, the moment you've been waiting for. The company with 850 million users, tripling AI revenue, and that rock-bottom valuation.
Is Adobe. Yep, the creative software giant, the company behind Photoshop, Acrobat, Premiere Pro. The quiet engine that's been powering the digital economy for decades is now somehow at the center of this incredible AI valuation mystery.
So how is Adobe doing it? How are they achieving this kind of AI growth? Well, the answer comes down to one core product. Its generative AI platform, Firefly. And this is not just another little feature. It is a brand new engine that is driving the entire company forward.
In Adobe's leadership, they see this crystal clear. The CEO, Shantanu Narayan, he framed it perfectly. He basically said that the explosion of content that's needed in the AI era, that's not a threat to them. It is their single biggest opportunity. They're positioning themselves to empower this whole new generation of creators.
And the adoption numbers, they're just staggering. Since Firefly launched, users have generated over 24 times billion assets with it. This isn't some niche tool for a few people. It's being used at an industrial scale, plugged right into the daily workflows of millions of professionals. And that scale is turning directly into business success. Firefly's ARR is already north of $250 million. It's being used by 3/4 of the Fortune 500 companies, and maybe most importantly, it's bringing new people into the fold, driving a 30% jump in first-time Adobe subscribers. That is monetization in action right there.
And let's not forget the foundation they're building on. Adobe isn't some startup trying to break into a market. It already commands a dominant 58% of the creative software industry with its Creative Cloud. So Firefly is being deployed into this massive, captive audience that already lives and breathes inside Adobe's world.
So let's bring this all together. What we have is a market dominator that is successfully rolling out a world-class AI engine, an engine that's driving real revenue and real user growth. Which brings us back to that final question. Is this an undervalued powerhouse? Well, it's not just us asking. According to the financial analysis firm Guru Focus, their official rating for Adobe stock isn't just undervalued, it's significantly undervalued.
And just look at how significant they think that discount is. Guru Focus estimates Adobe's fair value is actually over $600 a share, while it's currently trading under $250. That implies the stock could be trading at a potential discount of more than 60%.
So here's the bottom line. It seems like Wall Street is pricing Adobe like it's a legacy software company from a bygone era. But the data, the user growth, the AI revenue, the Firefly adoption,